Hello friends, welcome to my YouTube channel Simply Stocks, and today I'm going to talk about the auto ancillary plays, some of the best auto ancillary picks that I have for you. These can be bought over a period of time. So let's get started. First of all, disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about these auto ancillary plays, a small request that kindly support me on Patreon. Once you do that, will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. So that's a 16% discount. For detailed market or company talk, you can directly email me and we can work things out with a fee in understanding what your stocks are, portfolio, etc. And also, if you cannot pay on Patreon, you can join the YouTube membership as well, and you get all the benefits of Patreon on YouTube. The criteria for picking up these stocks, these are established brands, strong managements, and market leaders in their own space, yet diversified into different segments of autos. Low debt, no pledging, strong institutional holdings, or either we have strong promoter holding. Return ratios and profitability has been pretty good in very good times. In terms of allocation, what you can do is probably diversify. You can pick probably all of these and put 10% into these, and then mix and match with your large cap portfolio, or you can pick one or two of these, have 7-8% of your allocation into it, and then have the other 90% into large and mid cap, other kind of stocks that you'll be having. Hold for around 3 to 4 years because the cycle is turning around and should do well for the next 2-3 years. Should grow at a CAGR of 25-30% from FY23 onwards, and keep a 30% stop loss so that you don't lose all your capital if things really go haywire. My first pick in this list is MOTHERSON SUMI, the erstwhile favorites of everyone when auto ancillary move big time. It is a leader in its space. It boasts of clients across the board, not only in CVs or two-wheelers or three-wheelers, or you can say commercial, all that. They have clients all across the board globally, and it has been hit recently by a number of factors. So one being the slowdown in Europe because of pandemic, and then slowdown in Europe because of the war that we are facing, and this is just continuous from 2020 onwards. So over the last 2.5 years, it has been marred by a lot of problems in Europe, and 70%, 60 to 70% of their business comes from Europe. So once things start going better, I think over the next 6 months it should get better. I think Motherson Sumi will end up doing well. It is only an opportunity to buy and accumulate at these very good levels, but you should be having a time frame of around 3 to 4 years, as I mentioned. Not for trading, but it can go to 120 levels even. I mean, you can keep accumulating below 150, very good levels to accumulate the stock from a 3 to 4 year point of view. Second in this list is Endurance Tech, another top ancillary play in this segment. Primarily, they make braking systems, suspensions, and transmission products. They have global presence with clients across Europe. Better presence in Europe. There's strong HNI holding there, and Endurance has been pretty good and resilient even in severe downturn, and has been producing albeit reducing numbers, but a very decent set of numbers. Current decline is again an opportunity to buy the stock. The third in this list is JAMNA Auto, leading player in commercial vehicles. Again, it boasts of clients in the commercial vehicle space, again globally and in India. It primarily makes tapered leaf and parabolic springs for commercial vehicles, and again it is an economy play. So rather than probably buying into stocks which are into infrastructure, real estate, road construction, etc., you could buy ancillaries like CV plays, because commercial vehicles will be used big time if the economy picks up, and currently it trades at around 18-20 times earnings, which is very reasonable, around 90 to 100 rupees. Their clients include Ashok Leyland, GM, and M&M, etc. Ashok Leyland has come out with not so decent numbers, and that's why the stock of Jamna Auto hasn't done that well. But over 3 to 4 years, I think it is set to do exceptionally well. The fourth in this list is Minda Industries. Very interesting company, has done exceedingly well over the last 3 4 years. The major business is in Europe and US, and it has been hit hard because of the European conditions that we are having currently. Produces multiple car parts like switching gears, etc., switching systems, acoustic systems, and alloy wheels. The market cap of the company is below 27,000 crores. It has dipped from its all-time high. It has come down 15-20%. Very decent, you can say, valuations now to get into it and probably reap the benefits when the auto ancillary move begin in earnest. There's decent margins and expanding sales that are taking place. They have expanded their capacity as well. I think Minda Industries perhaps in these five the best of the picks in terms of valuations and the kind of order book plus the probability of producing numbers going forward is concerned. Again, do not put big money into it straight away. Probably accumulate 10-15% on every decline and probably take it in 5 or 7 tranches over a period of time, and hold for the next 4 years, 3 to 4 years. And whenever there is a huge bull run in this industry, that's when you book profits. And the fifth in this list is Automotive Excel, a very interesting company that always does well when the automotive cycle is at its peak, and it does exceedingly well, and that's why I picked this up. It is the leader in manufacturing axles and brakes, especially for commercial vehicles. Have come out with strong quarter. I mean, last time around the quarter has been good, but I think margins will shrink and quarter will get, I mean, this quarter onwards things might not be the same. So again, that is an opportunity to buy a correction in the stock and a correction with respect to numbers, because going forward in the next 4 years the numbers should improve if things improve on the ground. Their clients include Tata, TIL, we have Daimler Chrysler, we have Mahindra, SML, etc. So remember, SML Isuzu does well when schools open up, and there is a lot of commercial vehicle activity similar to what happens with Ashok Leyland. So what you need to do is pick them up at this point of time whenever things get going even a little bit. I'm not saying economy picks up and goes at 9-10%, but a little bit of uptick in the economy and you will see these stocks surge big time. So that's why probably this is the time to accumulate the stock. It is a Kalyani Group stock, so pedigree is good in terms of promoters. So hopefully this also should end up doing well over a 4 year period. So this was my video on the 5 top auto ancillary picks that I feel should be here. I know you would be talking about Sona, BLW, and other kind of stocks. Some of the stocks I have not picked because of the higher valuations that they are having, but I would definitely like to read your comments with respect to which stocks you would think would fit the bill as the top 5 auto ancillary picks. Please like and subscribe my channel, hit the bell icon so you can get my video straight away when I post it, and kindly do subscribe to the Patreon network. Thanks a lot for watching.